What is good, Tesla family? It's Ray J back with another video, and in this one, we'll break down what's going on with Tesla stock, what you should be watching for moving forward. I'm also going to talk about the overall market and how it may be affected by CPI coming out for tomorrow. I'm going to break down the technicals for Tesla, SPY, Nvda, the QQQ, and many tickers out there. Before I break anything down with all this information that's coming out for tomorrow, when is CPI, and what Fed speakers are going to be speaking for tomorrow as well, I do have to mention a couple of things before starting. Firstly, I am not a financial planner, so take none of this as financial advice. And also, if you guys can, please check out the Webull link, which is down below and in the description. If you sign up for Webull and deposit any amount of money into the account, you are guaranteed up to 12 free stocks, and the offer ends very soon, so check it out before they run out. With that out of the way, let's get on with the video. Tesla was up 0.07% for the day, holding up quite decently, and overall, we got a very sideways day for Tesla as expected. Now, in my video from yesterday, I thought we would be very sideways for today, but then in the morning, I told you we might get a pump at the very end of the day because the market was looking very optimistic, especially based off how futures were trading earlier on today. Looking at Tesla, we got these two pumps in the mornings, the pump and dump as we were expecting in the morning. Then we got some very sideways, boring price action for almost the entire day. Tesla basically just didn't even move, just going back and forth and back and forth. Then at the very end of the day, at the final hour, we got this very nice pump for Tesla and the whole market as the market's very excited for CPI. I'm going to break down what the data is suggesting about CPI, then talk about Tesla and just a couple more details. But first, let's look at this right here. We saw the Dow Industrials leading the way for the markets of 1.6%. The S&P 500 came in second place at 0.9% in the upside, and the Nasdaq was up about 0.7%, once again lagging behind a little bit, but still kind of green overall. The market is quite optimistic about the CPI report that's coming out for tomorrow at 8:30 a.m. Eastern time. So that's for the New York time. My time right here is all for like the West Coast because I am living in the West Coast. But for now, it's very important to look at the data and be ready for tomorrow. The data is dropping 1 hour before the market opens. You have to be ready for this. It's going to be huge. We're expecting CPI to be at around right here 3.2% is the forecast. We want it to be around there. And month over month, we want this to be up about 0.2% or lower. That's for CPI for all items. I will break down the charts in just a couple of minutes for them. And then for core CPI, this is going to be a lot more important because of what the Fed has been saying. We want this to be at 5% or lower. It has to be around there for the market to continue to hold up. If it's too hot, that's going to be a very bad sign. So be very careful with core CPI. This is going to be the most important metric, in my opinion, because of what the Fed has been saying. And then to add on to that, month over month, we want core to be up about 0.3% or lower than that. So make sure you watch these numbers very carefully. It's going to be super huge. Once again, 1 hour before the market opens tomorrow at 8:30 a.m. Eastern time for New York time, be ready for this. Before the market even opens, it's coming out. Now, if you're kind of concerned about this, I gave you guys a warning earlier today and told you that this is your last chance to secure profits on any like different positions, or if you're like trading options or any like spreads or anything like that. This was your last opportunity. And if you took the opportunity, great. If you're willing to risk it, that's always up to you. I will break down the charts in a few minutes nonetheless. Now, after CPI comes out, we have Cash Kari from the Fed speaking 15 minutes after the market opens. What he says will not be as impactful as something like CPI, but he could affect us to just some degree, maybe to some extent, depending on the data. And then Bostic and then Beige from the Fed are going to be speaking at about 1 o'clock p.m. and then 2 o'clock p.m. Eastern time. So watch them very carefully. We have Mestre speaking at the end of the day. That's going to affect us during the after hours. Besides that, it's not that massive from the Fed this time around. Now, I want to note that if we hypothetically, get a hot CPI, what the Fed says afterwards is going to affect the markets because the Fed is going to be very hawkish and start scaring a lot of investors. If we get a hot report, so be very well aware of that. If we get a decent CPI, then the Fed is not going to matter that much. The Fed is more likely to help the market hold up because a lot of these individuals who tend to be more dovish could just say more dovish things and talk about a pause. So watch all this data carefully. It's going to be huge. Right now, there's a 92% chance the Fed is going to raise rates again for the next meeting, which is a little bit over 2 weeks away from now. I believe it's very possible, but the Fed has to look at data first to become a lot more certain. This is what Bostic from the Fed said. Bullard also said this, but he was leaning a lot more like hawkishly than many of the other speakers, as he typically is. And then we had Jerome Powell say something very similar. Powell also kept on stressing that the Fed most likely has just skipped on the rate hikes, and they're going to likely do it again. So far, the data does suggest this because the latest jobs numbers are not looking that great for the Fed. The Fed wants higher unemployment and weaker amounts of jobs being added, not more. And the last jobs report showed a very big increase in the private sector. That is not what the overall market wanted, and that's why the market cooled off a bit. So we're gonna have to wait and see on this. Things are still looking optimistic though, regardless of this, and we'll just have to wait on CPI. This is going to be the next biggest factor. Now, as far as CPI goes, this is what the chart looks like for CPI. Remember, it's going to be diluted by a lot of other things like housing and etc. There's been a strong decline in CPI, which is the blue line right over here, over the last year. You can see we saw this peak around June of 2022, but this had to do a lot with supply chains and many other macroeconomic factors. In my opinion, there's a strong downtrend, and the previous data tends to affect the current data or the next report that comes out. What do I mean by that? Just to clarify, I mean, if we had 9% CPI or a 9% inflation rate for the month of June, you're not going to see it drop all the way down to 3% in 1 month. It's not going to go all the way up to 15% in 1 month. The next report is going to be very close to it. That just shows how sticky it tends to be and how it tends to be affected by the previous month. So, with that said, the last report that came out for May, we saw around a 4% CPI report. And that's for the all items included. So, it's going to likely be very close to this, if not lower, because the trend is looking like it's downtrending quite hard, especially since this year started. We've been getting lower and lower and lower CPI almost every single month. There's a good chance we're going to see it somewhere in the threes looking at this, but I just don't know how low it's going to be. The market wants, once again, a 3.2% CPI year over year. If we get something around there, the market's going to like that metric. If it's 0.2% up month over month, the market's also going to like it. We want something around there or lower. Remember these numbers in your head, especially for tomorrow. And also look at the headlines, they're going to be very huge as well. Now, for core CPI, this is going to be even more important. The purple line right here is core. This is all items without food and energy. The Fed is going to pay special attention to this because the Fed's policies don't have a direct effect on energy and food as they do on like other factors, especially like housing, for example, as they affect those mortgages. But what's important is core CPI right now. The Fed is talking so much about this because this has been higher than expected and not really dropping as fast as what the Fed wants. This is showing signs of being a lot more sticky. This also tells us that the energy price is dropping when energy was dropping so hard compared to like last year. I'm sure you guys remember gas prices were so high last year, and now this year they're just not as bad. Uh, so far, at least that's the case. They're still pretty high, but just like not as high as like what we saw, especially in my area. But it's just worth noting because the gas prices dropping are causing the overall CPI and the energy prices to come down. That's why we're seeing CPI being diluted by it. But when you exclude energy and food, CPI is still kind of hot. So that's for like other items such as like utilities, and the list goes on. But the point I'm trying to make is we have to watch this very carefully. Core CPI is going to be very important. The market wants, okay, 5% or lower core CPI year over year. If we get anything around 5% or lower, maybe like 4.9%, 4.8%, the market is going to pump most likely. The market's going to like it. That's going to be very important. So you want to pay attention to both CPI and core, and that's going to be very important. For month over month, okay, we want core CPI to be 0.3% or lower. That's for like the increase month over month. We want it to be lower. We want these numbers to be low. If it's above 0.3%, we get a 5.1% increase, the market's not going to like it. We could see the market slow down a bit. So be very careful with all this data dropping. I do not know what's going to happen. I'm not a fortune teller, so always be prepared for anything. However, looking at the current trend in the technicals, they are looking more bullish, and the odds do favor the market trying to push up more. I'm going to break those down in just a couple of minutes. Let's first look at one more thing about the markets. So for the whole market, don't forget we have earnings coming out for tomorrow. We have Thera Technologies, which is not really that significant. But for Thursday, we have some more big earnings coming out. We have Delta, PepsiCo, Progressive, and just a couple of others. And then Friday is going to be the biggest earnings day of the week. We have JP Morgan Chase, we have Citigroup, we have Wells Fargo, we have State Street, we have BlackRock all coming out. All of these are going to be very, very important for Friday. So be careful. This is going to affect the market big time by Friday. But for now, earnings are not that concerning until we get to like Thursday and Friday. For Tesla, a lot of the news that came out was more negative about it. Basically, their sales in China dropped quite a bit. We saw about 17,000 new registrations near the very end of June. And now for the first week of July, we saw only about 3,000. So a big drop in registrations in China was reported. I talked about this in the morning, so I'm not going to go into full details about it. There's also a lot of like drops in Tesla's prices for the Model 3. Also for the Model X, I believe there was a drop by over like 30% for the Model 3 and then like over like 21.8% for another one. So we're basically looking at this. It was actually 21.3% for the Model X. But overall, we're looking at this and we're seeing these drops, which is leading to more concerns about Tesla's margins. It's just worth noting. I went over this earlier as well. I just wanted to remind you guys about that. Nothing else really major about Tesla came out on the news besides those negative things. That's part of why Tesla underperformed compared to the markets. There's also an increase in shorting that was going on. We also saw a lot of manipulation going on with Tesla and a very healthy drop, which is completely normal. I must add that Tesla had, in my opinion, relatively low volume. The volume is slowing down in Tesla, only 91 million overall. That's almost half the volume we get typically. Very, very low volume. So it's dropping on low volume. It was trading sideways on it, dropping quite a bit. That's a decent sign that Tesla's trying to base around this level and get very comfortable for a bounce. It's a possibility, but not a guarantee because technicals and volume and things like this are not everything. The price pairs ratio is starting to curl a bit as Tesla's losing some strength relative to the markets. But this could all change if we get some kind of catalyst to help Tesla make a much bigger move. For now, it is looking a little bit weaker than before, though, looking at the price pairs ratio. Mizuho was the last analyst to come out that said you should be buying Tesla. That's a good sign. And none of this data really matters, at least for tomorrow specifically, because CPI is going to dictate the direction the market moves in. On top of this, I just want to add that the short interest on Tesla dropped just a little bit, just slightly. So we saw some short covering right before as we approach CPI. So we'll wait and see what happens later on before Tesla's earnings. But for now, I'm going to break down the charts. Now, let me just add, I do not know what's going to happen tomorrow. I am not a genie or a fortune teller because I can't predict the data perfectly. But I can tell you that from a technical standpoint, things are looking pretty bullish for the markets. All right. So first off, I am leaning more bullish overall. That's my prediction. I don't know what's going to happen, but I am predicting we're going to see more upside because we have a nice cup and handle like formation on SPY. And also, it's because of how the data is looking pretty good so far. We're seeing this big decline in CPI. Also, like core was starting to drop just a little bit. So I'm hoping we see a continuation of this. So I would be leaning more bullish, right? That's just like my educated guess about how CPI is going to go. But please don't just solely depend on me. It's just what I think is a possibility where I'm leaning more towards, but always be prepared for any possibility. So that's why I'm going to go over these numbers. So if we get a good CPI, what's a good CPI? Once again, if it's lower than the expectations I just named, if we get a core that's below 5% and a CPI itself that's around 3.2% or lower, and then don't forget about the month over month change, a good CPI is going to be lower numbers than expected. If that happens, we're going to see SPY fly for 444 and probably test this resistance for a very clean looking cup and handle. And the odds favorite eventually breaking this and trying to get to the mid 440s, if not even higher than that, so like 446 plus. If we get a bad CPI, what's a bad CPI? What's a bad report? If we get a lot of numbers higher than expected, if CPI is well above like 3.2%, it's like 3.7, 4%, 4.2%, or something like that. And if we get a core CPI, especially, this is going to be very important, above 5%, if it's like 5.1%, 5.3%, something like that, that's going to be bad for the markets. Above 5% core CPI is going to be bad. If we get bad data, we're going to see SPY get a rug pull and break all the way down to at least 439 or lower than that, probably all the way down to at least 436 or lower, in my opinion. All right, so bad data 436 is likely going to be our target. Good data, we're going to see this thing test 444 or higher. So watch those levels carefully on SPY. Now let's talk about Tesla. For Tesla, we have a possible cup and handle. It's not really like bouncing just yet, but it is trying to hold the 4-hour 50 EMA. You can see how it was trying to hold above it for the majority of the day. If we get a bad piece of data, if CPI is bad, okay, we're going to see Tesla retest 265, but then potentially fill the gap all the way down to about 262 or so if we get a bad CPI, bad data. If the data is good and we get lower than expected numbers, we're likely going to see Tesla bounce, try to push all the way up to about 276. Which direction am I leaning in? So we have this imbalance at like at least 276. I think Tesla's going to make its way up to at least 276. If it holds this, it could start pushing even more. And I think that's going to happen if we get a good CPI. What do I think is going to happen? We'll always be open for any possibility because CPI is unpredictable. It's quite capricious. But I'm leaning in the direction of us getting a decent one. I think the odds favor Tesla bouncing and pushing to at least 276. That's the direction I'm leaning in, but I'm always prepared just in case. And for SPY, once again, I am leaning in the direction of this cup and handle playing out and us retesting 444 at the very least, and potentially breaking it. Just based off technicals, it looks quite nice. For Aapl, once again, if we get a good CPI, it's going to push all the way up to at least this gap fill area around this 190 area. If you get a bad CPI, it's going to come all the way down to about the mid 180s, 184 to 185. All right. For the QQQ, we have a potential setup that's very similar to SPY, a cup and handle like formations, not as strong as it, but it is a possibility. If we get a good CPI, I expect the QQQ to make its way up to about 372 around that zone or even higher than that if we get lower than expected numbers because we want inflation to be low. If we get a high CPI, right, don't forget the Fed is going to be incentivized to be more hawkish to slow down the economy. They're going to be more restrictive with policy, which is going to slow down the entire economy and stock market. Just as one quick reminder, if we get a bad CPI, if the numbers are too hot, that's why the market's going to slow down. If CPI is too hot, the QQQ is going to come all the way down, in my opinion, to at least 365 to potentially 363 again, at the very least, if not lower. All right, so 363 if we get a very bad CPI. If we get a good one, it's going to go up to about 372 plus. Where am I leaning? I'm leaning more towards 372 plus on the QQQ, a little bit more bullish. That's the direction I'm leaning in, but I'm always prepared for anything because as traders, we have to be prepared for any numbers. But I am leaning more bullish based off the technicals. For Nvda, there's a potential inverse head and shoulders like structure that is developed. The odds favorite holding above the 50 EMA. I think if we get a bullish CPI, we're going to be watching this thing break at least to 432 plus. If it breaks that, then maybe even 440. If we get a bad CPI, it's going to come all the way down to potentially below 420 and make its way down to about this gap down here around like 408 or so. What do I think is more likely? I'm leaning more bullish on it. I think it's going to try to make its way up to at least 432, but just to be safe, be prepared for anything. For Microsoft, if you get a good CPI, it's going to try to fill the gap around almost 340 or at least 337. If you get a bad CPI, it's going to test 327, potentially break below that. Where am I leaning towards? I think it's going to try to bounce and fill the gap around 327. 337. Sorry about that, guys. Somewhere around there. I'm leaning more in that direction for potential accumulation and also a potential bullish divergence to play out. But just to be safe, like I said, always watch for the data. For AMD, it's the same thing, basically. Good CPI, we're going to see this thing fly for this imbalance around 114. Bad CPI, we're going to be watching around 107. I think it's going to try to bounce, try to make its way up to these higher levels. But just to be safe, watch the data, just to be safe. For Netflix, if we're bullish on Netflix, we want to see this thing bounce to this gap fill around 445. If we're bearish after CPI, it's going to break all the way down to about 436 or even lower than that, back down to 430. What do I think is going to happen? I'm leaning more bullish off CPI, but just to be safe, watch the levels very carefully. For the NASDAQ, it's the same thing basically as the QQQ. Potential cup and handle forming looks more bullish from a technical standpoint. If you get a good CPI, if it's lower than expected, expect the NASDAQ to break above 13,864 or so, at least retest that. If you get a bad CPI, if the numbers are too hot, we're going to likely see the NASDAQ come down to 13,600 or even lower than that for a retest of the 50 EMA at 13,485 to slow down tech. For SPX, it looks like a very clean cup and handle, looks more bullish. If we get a good CPI, it's going to break above 44.58 and make its way up to at least 44.60 plus. If we get a bad CPI, if it's really bad, if we don't really like it, if the numbers are too hot, it's going to come all the way down to about 43.80 or lower. I'm leaning more towards it's going to push up to higher levels and break this high above 44.60. I'm leaning more in that direction, but just to be safe, watch the data. The dollar has a potential inverse cup and handle that's forming. So let me just show you it right here on the 4-hour time frame. We have like this cup and like a handle forming. The odds favor this thing dropping down lower and retesting 101 or lower than that. If that's the case, it's going to be bullish for the stock market. But just to be safe, watch the data for confirmation. We always need to watch that just to be safe. For Coinbase, we get a good CPI. We could see this thing fly for like 95. If it's bad, we could see this thing come all the way down to 86.65. So far, it's holding up quite nicely, but there is this potential divergence that still is developing, so just be careful with it. But there's no sign of major weakness on the chart just yet, as it's still holding up. So just watch for CPI. It's going to dictate which way this thing goes. For Google, it's the same thing basically. Good CPI is going to bring this thing all the way up to about basically 120 is what I'm going to be watching for this gap fill at the very least. There's this gap that's unfilled at around 120. If it breaks down, it's going to come all the way down to 112, which is where we had an imbalance way back here. What do I think is more probable? I'm actually right now kind of in the middle with Google, but I do think it could temporarily bounce. The overall trend looks a little bit more bearish on it, the bigger picture. It could bounce a little bit to about 121st, and that's what I think is going to happen first. But it is still looking kind of weak from a technical standpoint. Now, if you're a long-term investor, you could dollar cost average into shares, and you're going to be watching earnings to see how it goes. Earnings may not be that strong with strong guidance for the next year because of the recession, so there could be some more downside for the like medium term. For the long term, for the next year, 2, 3, 4 years, I'm very, very bullish, especially if you dollar cost average down. I believe it will pay off. And I think what Google is doing with their AI adventures, with their new trends that are basically developing, I still believe in so much potential in this company. I'm still very bullish long term. For Amazon, same thing. If we're bullish, we're going to be watching 130 plus to break. If we're bearish, it's going to come all the way down to 125. I'm leaning more bullish. I think it's going to try to break above 130 at the least. I'm leaning more in that direction, but just to be safe, we have to watch for the trend, watch for the data, and watch for CPI just to be safe. If we get a strong CPI, if it's better than expected, lower than expected, basically is what I'm trying to say, a good CPI, we're going to be watching this thing break $300 on Meta. It's going to break 300, make its way up to 305. If we get a bad CPI, if CPI is hotter than expected, if it's bad, it's going to come all the way down, in my opinion, to retest about 290, which is where we have our 4-hour 50 EMA. Where am I leaning towards? I think the odds favor this thing breaking above 300 because the trend is still very bullish looking. It's still uptrending very nicely, and it wants to fill the gap it formed not too long ago, all the way up into like the 320s. I think Meta is going to most likely break 300 very soon. It looks more bullish from a technical standpoint. But just to be safe, watch for CPI just for confirmation. All right, guys. So thank you all so much for listening. Have an absolutely spectacular rest of the day. Remain calm, cool, and collected. And I'll definitely see you guys in the next one for tomorrow. Get ready for CPI. It's going to be absolutely massive. Thank you. The market to the moon is the long term is still incredibly bright. And peace out.